Welcome to Wealth Management Mixtape, a go-anywhere show about life, finance, and investing. Join Jake Heisler and Tim Miller as they talk about what they're reading, writing, and experiencing. Jake Heisler and Tim Miller work for Quaker Wealth Management. All opinions expressed by Jake and Tim or any podcast guests are solely their own opinions and do not reflect the opinion of Quaker Wealth Management. This podcast is for informational purposes only and should not be relied upon for investment or financial planning decisions. Clients of Quaker Wealth Management may maintain positions in the securities discussed in this podcast.
The inflation data?
Yeah, 5%.
All right, kick it off.
Yeah, I don't know if you want to start off with inflation and rates and Jerry Powell. I think that's been the big news every month since we started this podcast, probably.
You know what I came across the other day? I came across there's something that's blockchain based for inflation, and I'm looking it up right now. If I can find it, there we go. It's called Trueflation. It's a website. And it tracks real time the cost of goods or housing services and stuff. And so literally changes day to day. I'm looking it up now. So we're at 4.4% according to Trueflation.com. And that we hit a low of back on March 24th of 3.87%. Trueflation. That's year over year adjustment. So it's changed. It's up 0.04% from yesterday.
And
so
how is it measuring it on a daily basis?
That's a good question. I don't know. I think it's just pulling from certain prices of goods, like it mimics CPI real time as opposed to taking old data. But the biggest component, the two biggest components of CPI, or of this data set, is food and beverages and housing. And this has real time housing, like rents and stuff, which obviously CPI lags considerably. And they have rents as of today at the lowest level. It's at 1.19%. So that's down from May of 2022 at 14%. So that number hasn't hit CPI yet. It turned lower, right? It was slightly below expectation, I believe. So we saw the market rally that morning, and then, of course, gave it all back by the end of the day. But yeah, so I guess the point is that inflation is a lagging indicator, but there are options to see it more real time, and I'm not sure that matters to our buddy Jerry Powell or not. So I think again, we talked about this last time, but I think it's pride versus the right thing to do.
And do you think that pride's going to put us into a Fed-induced recession?
Well, they said that. So they were predicting a mild recession. Look, you can't take anything at face value from what the Fed says. So, I mean, what do you think? Here's my real quick take. There's no way that the impact of higher interest rates is even close to being captured in economic activity, right? Would you agree with that?
Yeah, it takes time for that to feed through the system. It could take up to a year for that to feed through the system. We've already seen cracks in the banking system, and things are going to, as we have talked about on this show and here in the office extensively, is commercial real estate. Is that the next shoe to drop in the line of things to start to fall in the rising interest rate environment that we're currently in? And one person who I watch a lot of, and we talk about the talking heads all the time on CNBC or any other news outlets that we follow, is Jeremy Siegel. He's a professor, I think, of economics or finance at Wharton School of Business, and he has been pounding the table on the fact that all of the tools that the Fed is using to look at inflation data is such a backward-looking, like a CPI, it's such a backward-looking indicator, and all of these indicators are lag indicators, so you really aren't getting a true sense. Maybe we should tell, and Jeremy Siegel should tell our buddy Jerry Powell over at the Fed to use this blockchain, Trueflation, as you're talking about, a more up-to-date current inflation number, because if we're going to overhike, it just seems somewhat, I'm not under the gun like he is, and obviously he's got a ton of responsibility to handle at this point. He's trying to almost, to your point, it's his pride and blocking out the noise of everybody saying he's kind of overdone it. But he doesn't want history to repeat itself in the 1980s, where we stopped short of raising interest rates and then had to come back and raise interest rates. I guess it was fivefold at that point, and make sure that inflation was taken care of. So, to your point, yeah, I think that pride is a large part of it at this point. And this morning, I was watching after the was it PPI came out this morning. A couple of the folks on CNBC were talking about, what do you think the likelihood or percentage likelihood? And I don't know where they get these percentages from. Like, if it's based on like a 2-year note and the yields and where they are, like what the yields are telling them to do. But what the percentage of a 25 basis point interest rate hike is at the next meeting. They're still saying 60 to 70%. That seems high after the data that we just got the other day.
Doesn't it feel like the there's two things that I'll kind of as an outside observer for all of this. One is it's tough to change the way that the Federal Reserve or any other government or tangential government agency operates. It's tough to change their data set, right? If you're used to operating off of a certain data set, if you change it, then you have to set a whole new set of rules, come with a whole new set of rules based on it. And then you have to change, like it's going to be pre new data set and post new data set. So there's these contingencies that are always built into that. So it's entrenched in this old way of doing things to the detriment potentially of the economy. To me, so they're talking about recession, right? That the Fed's talking about recession. Okay, that makes sense to me. So if they are sincerely concerned about a recession, then they'd stop hiking, right? I mean, if they think they've done enough demand destruction to make the forecast of a recession, then why keep doing it, right? If not for pride. And so I think they're willing to push the the economy off what they think is a small cliff to prove a point, I guess. I don't really know at this point what the motivation is beyond overcompensating for their prior errors.
Yeah, well, I mean, we've talked about it a couple of times in your analogy of a cinder block and a bathtub effect where everything is kind of backwards since COVID. But let's be honest, they want higher unemployment levels. They want higher jobless claims because that's the one way that they can actually fight wage inflation, right?
Let's walk through this. So here's usually I think the course of or the steps that this goes through. One is earnings are poor, right? So you have this pullback in earnings, corporate earnings, which impacts GDP, right? So if you have less productive companies, you have less productive overall gross domestic product. At which point companies start laying off folks to help their bottom lines. It's already started to happen. And then unemployment goes up, right? So to me, if I'm looking at things and saying, well, if the borrowing costs, if we've raised the borrowing costs substantially at this point, and it's enough to impact that first domino, which is earnings, then the other dominoes will fall naturally. We don't have to keep hiking and build a bigger domino, right? It's still going to knock the next one over. So that's what gets me frustrated sometimes is that, and I'm not an economist and I don't claim to be, but it seems, I wouldn't say obvious, but it seems like a practical, logical, step-by-step process here that I don't know why it's being ignored. I don't quite get it.
Yeah, but we really haven't seen a huge miss in earnings, right? Like earnings have been somewhat resilient. Now, earnings forecasts and guidance has come down considerably, which is probably why some of the earnings have held up better, is because the forecasts have come down. So you're right. Is the Fed not taking into account all the different things that's going on at this point? And to your point about overhauling the system of how they come to conclusions and make decisions, it's not, if they're going to put a new system in place and say, okay, well, here's the new system, here's the old system. The problem with putting a new system in place, and especially in a time like this, is it's not back tested, right? So it's not back tested over the last 50 years, which, hey, here's how we make decisions, how we come to conclusions. Here's how we operate under these different data sets that we have available to us. Even if they know that they're lag or lag indicators, some of these things take a while to feed through the system. They should, everything like let's give an example to baseball right now. Baseball was something that's been around for over 100 years. It's one of the main sports in our country, and yet they are overhauling it in the last 5 years to make the game more exciting for fans to stay at. So they have pitch clocks, they have number of times you can throw pickoffs, they're speeding up the game, and it's just everything needs to be updated at some point. And it just to what me and you talk about all the time is, why does the Fed not see the need to put more emphasis on some of these other indicators? I don't know.
Yeah. I've got another analogy for you. I feel like the earnings thing is just all kind of BS, right? Because analysts just adjust their expectations. It's like
I agree.
It's like playing golf, and then at the end of the round, you change your handicap to suit your score. So you say, no, I did great. I'm an 18 handicap today, and I shot a 90. Fantastic. Next time you go out, you shoot a 100, and you're a 25 handicap all of a sudden, and you're benchmarking yourselves against the other folks with other handicaps. It's a little silly, but earnings are definitely down. It's just relative to what analysts' expectations are.
Yeah,
they're fairly in line, or maybe even a little bit up. So that domino's falling, right? And the unemployment thing's starting to happen. And once the bottom line on companies on earnings goes down enough, not relative to estimates, but just generally speaking, the easiest way to cut costs is to cut labor. Yeah. So it's got to be the next shoe to drop. I would imagine over the next quarter or two that picks up quite considerably. So, and then I don't know if it's too late. I mean, look, the bond market's calling the bluff, right? So the bond market's saying you're overshooting this. The 10 years at 3.5%, 2 year I haven't checked recently, but it's come down substantially. And that's the prediction of future rates, right? So they're saying, it's not you're going to raise rates, but you'll probably cut them by the end of the year. I think there's factoring in a couple cuts already by the end of the year. So it's all, and I wouldn't be surprised, right? That's the way the Fed operates, it seems, in recent history, at least.
Yeah. Whenever they say they're not going to do something, I don't put a lot of stock in that, because it seems like they do the opposite. And it's not like they do the opposite a year later. It's like sometimes they do the exact opposite 3 months later.
Right.
So they're very, as they say, data dependent, and sometimes that changes their course of action very, very quickly. And I'd be interested to see what Jerome Powell does after these numbers. If he's going to actually hike another 25 basis points. I think a lot of people were surprised that he raised interest rates last time by a quarter point after everything that went on with the banks. So there's so much stress on the system already. Why keep doing it at this point? Like, can't you just say, hey, we're going to hang out for a second and be data dependent? Like, it's not going to hurt you to not raise for a month, and then you have another month of data flow through, and you get to make a decision at that point in time. Now, one thing we're focusing a lot of our attention on is the commercial real estate side of things. And, there's a lot of, different commercial properties with, that are coming due over the next couple of years. And I know you've written LinkedIn posts about this, and I know we've had a lot of different influential investors like Warren Buffett have their opinion on these types of things. But what's your take on commercial mortgages before I get into Warren Buffett's take? Or commercial real estate?
I would have jumped right to his. It's a lot smarter than mine.
Well,
I was going to say, it seems to me like it's sometimes when things are so obvious, it's just not the case, right? It's like if everybody thinks there's going to be a recession, then the market doesn't have to fall anymore, right? If everybody thinks something's going to happen, it's already priced in. That's how the market's forward-looking from that regard. So everybody thinks that, these commercial loans, there's going to be an uptick in defaults, that should be priced in already to, these CDO. Anyway, it should be priced in on the banking side of things. I think it's a problem, right? I think if you have higher rates for longer, and we already know what happened with, Silicon Valley Bank and Signature, and so if you're forced to reprice your asset, you have to go out and you have to take control of a property that the tenant defaulted on, right, or the owner defaulted on, and it's sitting 60% empty, right, because of people working from home or whatever the reason is, they lay people off. It's not going to hold value, right? It's not going to be the same value. You're going to have to sell that at a discount, and it's not going to equal what the profit margin would have been for the loan in the first place. So if that's sitting on your balance sheet at a loss, and then you have a run on money from the banks, it's like it's a double-edged sword. So I'm more. I mean, I don't know. I can't. Smaller banks certainly than larger banks are going to be impacted by it. But we're talking about a year or two from now, right? So usually a lot of these loans are 2024, 2025, and we could be in a drastically different interest rate environment then, right? So maybe they can be refinanced at that point. I don't know. So we're worried about 2 years out, but in this environment, 2 years is a long time. So things could change quickly.
And I know a lot of those are coming due in the next couple of years, but I'd be interested to see how, say a bank has a property that they, have to take control of when somebody doesn't renew a lease. Like, how are they going to sell it? And you're saying at a discount, but sell it in a way that's like repurposed for a different type of business, right? Because these large corporate offices, they're going to have to be repurposed, whether they're micro fulfillment centers or, I don't know enough about the space, but it just, I read up on it every once in a while, and it just looks like a lot of these commercial real estate and, corporate office buildings are going to have to be repurposed into different type of, structures for different businesses. So going on to Warren Buffett, he's saying, first and foremost, this is not 2008. Banks are really well capitalized, and he says more or less banks, just like everybody else, are going to make some bad investments, but banks should be prepared for losses. And then he goes on to say people who lend too much money should take losses. So banks who lend too much money should be able to take losses, and really that banks are really they're factoring in that they're going to lose money on certain amount of loans that they lend. So
yeah, it felt to me like, and I saw that CNBC interview. It felt to me like, not that he was skirting the issue, but is he buying banks? I mean, they're at a big discount right now, right, relative to their all-time highs. I don't think so. So maybe that tells you all you need to know.
Is that he's not buying banks, right?
yeah, right. So
he's saying there's no issue yet. Somebody who's been an advocate for like a Wells Fargo and a couple of other big banks, he's not buying the banks right now because he knows that there's issues with them.
Yeah,
exactly
he's not
right.
Ready to put his money behind it at this point. And for a value-based investor, that's all you need to know, I think. So, no, I'm of the firm opinion that there's another shoe to drop in the banking industry. I just don't know when and where it comes. But this is like we talked about this before. It's the first major bank it's the earthquake, it's the initial earthquake, and there's always aftershocks. Sure, the Fed's willing to step in, but there's going to be other things that come of this. There just have to be. It's just how it always works. And it's unfortunate. It is. We discussed a lot about AI last week. It's the more I read about this, and the more I internalize it. It's a big deal. I don't know if there's a profit center yet for it, right? I don't know if there's like a payoff from an investment perspective, but I think it's a big deal just for how individuals, companies function, right?
Do you think it's a threat to certain jobs and society overall,
Oh,
or
yeah.
do you see it as more of a good thing to help propel business?
I think it's going to start off in a way that if employees don't adopt ChatGPT or some equivalent, that they're gonna be replaced by people who are willing to adopt it, right? Because that person that adopts it is going to be more efficient in their in what they're doing at their job, right? There's applications across the board. I do wonder. I almost searched this the other day on ChatGPT and I got distracted with something else. But which businesses are most susceptible to automation or to integrating ChatGPT into it, but are the least likely to integrate ChatGPT? Like I'm thinking of people like I don't know, plumbers or landscape companies and whatever it is. You're using Midjourney to create their visuals and then their campaigns and there's probably industries that are ripe for really smart people to come in, automate, and replace the old way of doing things. So I'll have to search it when I get a chance.
So you don't think that plumbers are going to be replaced by Chat GPT anytime soon?
Well, I don't mean the actual physical labor, the work. Of course not, right? But who rises to the top as far as a local presence, right? So if I'm a plumbing company, I would have to think that I would leverage that immediately for
from like an SEO standpoint, or
yeah, absolutely, yeah, totally.
I mean, yeah, it can do so much. You could be a plumber with an app, right? So it can code an app for you. You can have people book appointments through your app. It could propel your business. If you're a savvy business owner and not just a plumber, right, or a landscaper or any other trade where you don't think that ChatGPT or AI is going to have any impact on you, you're right. It could separate you from your field. Now, another field where you're saying it could replace you altogether and probably already has started to in the short time that AI has been around is somebody like a copywriter. But copywriters are now turning into what they're calling prompt engineers. I've seen salaries for prompt engineers over $300,000 or $350,000.
Wow.
So it seems like it's not going to replace a lot of jobs, but you're right. Those who fight or resist the evolution and acceleration of AI are going to be the ones who are replaced. Those who adopted and early adopters are probably going to be pretty well rewarded for understanding prompts and how to actually input good, clear and concise inputs into AI to get whatever you want out of it. So that's something that you do. I come down to your office all the time, and you're always on ChatGPT and trying to figure out different ways to use it and learn about the technology. And it's pretty interesting what you can put into like a ChatGPT or any other AI to get an image or an output or even just a question, right? Because it's taking all the information that instead of going into Google and searching through different links, it's just compiling all the different data available into one clear and concise answer. So it's pretty powerful, and I understand why people like Elon Musk and Steve Wozniak are putting together a list of folks to petition to pause development of AI until there's some safety, I guess, guardrails or precautions put in place.
Are you so that's the Terminator thing, right? I mean, that's like or iRobot or whatever it is that they come back and they turn on us as and try to overtake human beings. That's in essence what they're saying is, hey, hold on, we got to be careful about this, because if we're going to create something that's vastly smarter than we are, with capabilities way beyond being the best chess player in the world, right? To be multifaceted. What's to say it doesn't stop us or stop it? How to say it doesn't stop itself?
Yeah.
Anyway, so it's interesting. There's something from so I know we mentioned Ray Kurzweil way back in like one of our first episodes, and he's like a prognosticator on future technologies, right? But more around AI. and are mostly around AI. He predicted like 87% of his predictions have come true, and he started back in the 80s, right? So the iPhone and a bunch of other things. And he's of the opinion that we're not far off what's called the singularity, which is I think he says 2045 is the year. That based on how technology or AI is advancing at an exponential basis, that there's going to be a point in time when AI is 1,000,000 times smarter than we are, right? Than your average human, and is therefore capable of things we can't even imagine. So the singularity is a point at which there's a super intelligence that we as humans can't even fathom what the future might look like, right? That's that point in time, and it's within our lifetimes. So
it's well within our lifetimes if you're talking 2045.
Exactly. So we're talking about 20 years or so from now, and he's talking about before that, the merger, in essence, kind of a symbiotic relationship between AI and humans that we're we have things inside of us, nanobots that help, cure diseases or illnesses or fix a muscle tear or whatever it is. Things implanted in our brain that, like a ChatGPT, that can automatically pull information, meaning we have the intelligence in our minds to answer any question immediately.
That's wild.
And I think that's not too far away. That's before the singularity, right? So that's within that 20-year period of time. And so I think we'll look at it as, if you're looking at the bright side, as a way to make humans healthier for longer and more efficient over time.
I look at it like, how can it attack larger issues like climate change? How can it help us, reduce emissions or speed up the process of electric vehicles or different alternative energy sources? Like, how can it help us in those regards make decisions or build efficiencies into what we're already currently doing? So that's like the pro of AI, and I don't know the answer to that, but I'm hoping that's something that it can evolve into assisting us. And then on the flip side, I think of, okay, well, the cons could be the wrong people start to learn how to use AI to their benefit. And something that's really a growing trend and has been for years now is something like, cybersecurity threats and what people can do, because that's the next type of warfare. It's not, wars are always going to be fought like they are right now, like Russia, Ukraine, and there's always going to be conflicts like that. But really what you can do and damage a country is cybersecurity wise. So we've had leaks come in and where they'll attack our power grids and all these other things. And I don't know what AI can do to assist people in those positions, but I look at it on those two things at a much larger scale and say, how is it going to affect us in a positive and a negative way?
Yeah. And I think I just had a train of thought and I just lost it. Oh, I think most conflicts, right? Most wars, conflicts are about the control of resources, right? In this case, oil or the path to oil, whatever it might be, right? But I think one thing, to your point, that changes from this is we find more efficient ways to develop and energy sources and things of that nature that replace the need to go out and control those resources, right? Or an efficient way to convert salt water to fresh water, with the help of AI and that sort of thing. So that's one of the other resources that we're lacking on these days is fresh water. So I think it would lead to less conflict, therefore less of a motivation to be a bad actor or whatever in this space. And there's always going to be, with anything, any new technology, right? Crypto or the internet, whatever it is, there's always going to be bad actors, and there's going to be a counterbalance to that, right? That they figure out how to take a bunch of money from a cryptocurrency exchange, and there'll be a security protocol that gets invented to stop that in the future. So I think it's going to be really. I think we're really lucky. I think that's kind of the point I wanted to make, which is how for me in my mid 40s, I've gotten to see the advent of the internet, right? At least publicly used, right? In the 90s and then 2000s. The cell phone, right? So I didn't have a cell phone until I was out of college, okay? Digital currencies, right? That everything is transacted online, or the potential thereof. And now, computers being smarter than us to, I think, hopefully help make a better world. And this is all happening within we're talking about 25, 30 years at this point. It really is amazing. So just think about how far we've come from the year 2000, for example, when I didn't have a cell phone. And now every piece of knowledge we ever wanted to know is literally in our hands. We already share space with machines, right? It just sits on our desk as opposed to in our head. What's going to happen in the next 25 years? I
guess it's hard to predict. According to Ray Kurzweil, where he's just saying the exponential growth is going to make it harder and harder to understand where technology is going to be not only a year or two from now, but even 5 years. It's so much harder to understand the trajectory of technology. Like, where will AI be 5 years from now? It's crazy to think, because I'm just starting to learn about it, let's say, in the last 6 months, and the amount I've learned in 6 months and how far these different AI technologies have come in just a few months is it's pretty powerful.
Yeah. I think both of us, we subscribe to Barsi's newsletter, which is, if you haven't done it, it's BARSEE newsletter. He's blown up, right? You can see he's shocked at how many subscribers he's gotten over the last 5-6 weeks.
Every week he adds 8,000 to 10,000 followers.
I know.
Or subscribers to his newsletter. It's really wild to see how many people have an interest in this.
Yeah, it's but I think we're still scratching the surface, right? If you ask most people, they haven't looked into it, right? But his newsletter is really good. One of the things that he had on his latest newsletter was about voice augmentation, and he had a link to this company. I forget the company's name now, but we'll put it in the notes. But it was a video of what's his name from Facebook?
Mark Zuckerberg.
Mark Zuckerberg, yeah. And one of his interviews he's done, and then they took his voice, in essence, and made it different narrators, right? One was like an anime, which is just a goofy sounding, but it was the exact words he was saying and the same cadence he was saying it, and it would match his lips as they move, but just a completely different voice. And so we were talking about this earlier today, but there's a Raoul Powell, who is in our world, as far as the investment world is concerned. He runs something called Real Vision, which is just an investment-based platform. Anyway, he's written a newsletter for the last, I don't know how many years, and every week I think he writes a newsletter. So it's millions of words probably at this point, right, that he's written. And he's on video all the time too, doing podcasts and talking to his clients. And so they're working now on integrating all of that into one, to say, for AI, for example, to take, a concept that they want to talk about, write the script for them, and then create the video in his likeness and his voice. And it would be indistinguishable from seeing him on a podcast today. But that's incredible to me.
So how many seasons of Wealth Management Mixtape do we need before it just creates it for us?
I don't know. It probably has some glitches if we try to do it now. But conceivably that could happen, right? I mean, and I don't know that I feel a little strange about, right? That not knowing what's
being produced on your behalf.
Yeah, and we talked about this back in the day when I can't remember why it came up before, but you could create whole movies, pretty soon with an actor's likeness, their voice, their mannerisms, their cadence, their everything. They don't even have to show up to a set, right? So you're just paying them for, I don't know, their likeness.
Yeah, likeness, exactly.
That is wild. It really is wild.
Anyway,
that's going to be strange.
we'll finish up with something we used to do at the end a lot, and just say, what shows you watching, or what have you recently watched?
I'll let you, have you thought about this? I had to think for a second.
I am currently rewatching Game of Thrones.
Yeah. Okay.
Yeah.
I never watched. I think I watched the first 3 seasons.
Just couldn't get into it?
I was confused. I'll be honest.
Yeah. Luckily, I had somebody watch the first 4. I started watching. This is my 3rd time going through it. So I've watched a lot of Game of Thrones. Not to spoil it, but the last season is a bit of a letdown if you haven't already heard. But still a great show. And the first time I watched it, there was only 4 seasons out. So I think there's 8 altogether now. So it was still ongoing when I first started watching it. But I had somebody who had already seen all 4 seasons watch all 4 seasons with me. So they would explain everything. I couldn't remember anybody's name for the first 2 seasons. So you're not alone in that. But it is...
When it first came out, when I was watching it, it was probably when you were watching it too. It wasn't like the whole season was available in one shot. You had to wait for the next one and wait for the next one, and so there was time in between to forget all the stuff that happened.
It's exactly what happened. So, like, I watched the 4th season, then stopped for like 10 months or a year. I had to rewatch the whole 4th season again, or like the back half of it, because I wouldn't remember anybody's name or what was going on. So it's much easier to watch that show when every season's available. You can just go right through it.
Yeah. I'm watching, we just watched The Night Agent on Netflix. Have you seen that?
No, I've not. I've never even heard of it.
It's fairly mindless entertainment. It's like an FBI agent who there's a whole. It's like, have you ever watched 24 with Jack Bauer? 24. It's kind of like in that vein.
A little bit.
Yeah, but it's one of those shows that they tell you several times exactly what's happening in the moment, so you can't not miss it. I mean, it's like it's this person might be involved, and then like 2 seconds later, it's like that person could be involved, and that person could be. It's like a reinforcement of the. So you don't have to like think about it at all, which is nice sometimes. I'm watching the final season of Succession. Have you watched that?
No, I've never watched that. I've heard great things about it, though.
It's got to be one of my favorite shows, probably all time. It's probably top 10 all time.
Wow.
And we're watching Yellow Jackets. Have you gotten into that at all?
None of them. I haven't heard of that one. The only one I've heard of is Succession, which I've heard a lot of great things about.
Yellow Jackets is it's nostalgic for me because it's a soccer team in 1996 that gets in a plane crash. Girls soccer team, 1996 gets a plane crash and stranded in the Northwest, and all this stuff goes on, and they flash back and forth between present day, today, and 1996. So a lot of the music's like the late 90s. So for me, it's kind of cool, but that's pretty good. That's in the middle of the 2nd season right now. Succession's wrapping up the 4th season. That's the final one. They're not going to make any more. So I always look forward to that show.
Cool. Anyway. And then we have Severance coming back soon, right?
I'm going to need a recap for Severance.
Yeah, that's a wild show. It's a little out there, but you're the one who got me into it. I do like it, but definitely going to need a recap on that one.
Yeah, I'm a fan of that one too. All right. Let's hope Jerome Powell gets our message. See ya.